What's up, traders? Anthony Crudele here, and thank you for tuning in to 10-Minute Technicals, where I give you the technicals in 10 minutes or less. And as I always say, if you're looking at your charts and you can't figure out the technicals in under 10 minutes, then you've got way too much going on in your charts. And today is the perfect day for today's topic, identifying whether or not a market's in a trend day, up or down, or if the market's going to be in a two-way consolidation tape. Now, today we're going to be focusing on the E-mini NASDAQ, S&P, and Russell markets. There are futures markets. If you're on TradingView, you're going to see the symbols NQ1, exclamation point, ES1, exclamation point, RTY1, exclamation point. These are the continuous contracts for the futures markets. Also, a quick reminder, we are in rollover where we're going to go from the March contract to the June. So realize that anytime you have the one exclamation point on TradingView, it's going to be the front month, and we're going to be rolling into June in just over a week or so. And also, if you are on TradingView and you are interested in trading futures on TradingView, I use TradeStation to trade futures right here on TradingView. You can see the green light next to my TradeStation down there on the bottom of the screen. And you can just go to tradestation.com/Anthony to learn more about becoming a TradeStation account holder, where you can connect right here to TradingView. Now, let's take a look here at the E-mini NASDAQ. That's where we're going to start. The indicators I have up here, pretty simple, standard indicators. Bollinger Bands, 20 period, 3 moving, 20 period, 3 standard deviation with a 5 period moving average, not the middle Bollinger Band. I also have my beacon indicators up here, which is free, open source on TradingView. That's just, if you were to take a fib tool and draw a line from one Bollinger Band peak to the next, it's going to be 0, 70, 50, 30, percent lines. I use those for a guideline. Like I said, that's free here on TradingView. And that's all I have up here. Also, this moving average right here, what looks like a moving average, is also the anchored VWAP to the beginning of the year, and I always keep that up. Now, when you look at the charts for today in the NASDAQ, here's the important thing you have to notice. First thing you do when you're identifying whether a market could be in a trend day, up or down, is look at the daily Bollinger Bands. I also like to look at the 5-day moving average as well. That's why I have it up there. But what you want to look for with the Bollinger Bands is simple. Is the Bollinger Band's mouth moving open and outward, right? Because anytime a Bollinger Band is moving outward with the market, so you have a market that's going up and the top Bollinger Band is going up, the bottom is coming up as well. Sometimes it'll go up and then it'll go like this. It'll look like a mouth that's opening. That indicates range expansion. So the likelihood of a trend day in that direction is pretty high. The probabilities are really high, right? And you have a 5-day moving average sloping upward and the market's above it. Very high likelihood of a trend up day. Okay, pretty simple. Anybody could do it. It's just an addition to any strategy that you're using. Let's take a look at the E-mini S&P. E-mini S&P, here you go. Top Bollinger Band. What's it doing? Top Bollinger Band's up. Moving up as the market's moving up, and you have an upward sloping 5-day moving average, and you could use a 10-day moving average too. Really just a preference there. Bottom Bollinger Band is moving up as well. Sometimes when you get the really extreme moves, like I said, you'll have the top going up and the bottom going down, that outward moving Bollinger Band, and that could really mean really big range expansion. Right now, we're just kind of grinding higher. I mean, that's what we're doing. We're just grinding up. And so the likelihood of a trend day in ES is pretty good. Let's take a look at RTY now. Well, here's what's interesting about RTY. What's the major difference here, everybody? The top Bollinger Band is starting to come back inward, right? The bottom is coming inward as well. You have range contraction. You have mean reversion. Now, overall, it's above my beacon level and it's above the 5-day moving average, which is sloping higher. So we could get a trend day, but it's a lower probability because of what's happening on the daily. And you can see the top Bollinger Bands getting kind of flat. And if we start to see that open back up again, and maybe that bottom starting to open up like this, then you could have a really strong move potential in RTY. And so for right now, RTY is doing what it's continually done a lot of this year. Attempt to go higher and really just consolidate near the highs and not make this range expansion, this breakout move. And so a lot of people probably over anticipating RTY for that to happen, but it's just not happening, right? And when you look at the technicals, this is a great way to identify whether or not RTY or the E-mini S&P or E-mini NASDAQ could have range expansion. And right now, today, you saw range expansion in the E-mini S&P and E-mini NASDAQ, not in RTY. It starts with a daily. Let's take it down another level to the shorter term charts because we got a lot of day traders watching this. And how could we look at that to help identify whether or not it's going to be a trend day or a consolidation day? And I've done this several times before on this 10-minute technicals where I've talked about the anchored VWAP with a 3-minute chart. So here we have a 3-minute chart, and I'm actually just going to click on this. You don't need to see this right now. It's just another VWAP I have up there. I want you to be focused on exactly what matters here. What I look at is the RTH. If you look at the bottom of TradingView, you could have ETH or RTH. That's regular trading hours. I take a 3-minute chart and I box out that range. That's my 3-minute opening range, whatever you want to call it. It's my 3-minute opening bar. And I look at it like a boxing match. Once that bell rings, after the first 3 minutes, I box out that range. It's enough to take the initial punch of volatility using my boxing references right now. And once that goes off with that bell, I then anchor a VWAP there. And once I anchor a VWAP to that opening 3-minute bar, I watch to see if the market can get above or below that opening 3-minute high or low. Very simple concept, right? And once it does, you can see right here it did, okay? You could see it got above it. And then what did it indicate? A trend up day, okay? Market continued to grind up all day. Didn't even go back to the VWAP, right? So this is the E-mini NASDAQ. Strong move higher, crossed above that opening 3-minute high and just continue to trend higher, right? You could put standard deviation bands, and I'll do shows on this going forward and other ways to trade it. But the key here is identifying if it could be a trend day. We went to the daily, Bollinger Bands were open, upward sloping 5-day moving average. Bulls are in control of the market. You get a VWAP that crosses above the opening 3-minute high. Market's in a trend up day. Be careful of being short. Or if you're going to be short on the edges. Don't be selling into a pullback. Okay. You want to be buying the dip and these types of days. At least that's what it's indicating to us. Now let's take a look at the E-mini S&P. Very similar look, right? Now it did come back to the VWAP multiple times. You can go back and we're going to just draw a little circle here to show when it happened. And then look what happened. Crossed above it. At this point, every pullback to the VWAP was held and the market continued to grind higher. This is really textbook of what I look for, because when the market holds above, when the VWAP holds above that opening 3-minute high and the market comes back and holds the VWAP, these are the days where the market just keeps going up and up and up and up, especially going back to that daily where that Bollinger Band is opening up like a mouth and the market just doesn't want to go down. And that's what we're seeing today. So why fight it? These are the tapes you don't want to fight. Okay. And that's really the number one principle I'm trying to help you identify here is some of you might have been getting short on a day like today, when in reality, the market's telling you through the daily and the short-term chart, only look for longs, right? Agree or disagree with it, doesn't matter. The market's proving to us through these simple technicals. Last, we go to the RTY. And this goes back to what I had said from the beginning. When you look at the daily, the RTY has a lower probability of a trend up day right now. And what happens when we get to the short-term technicals? Some people might look at the S&P and NASDAQ and say, well, maybe the RTY is going to play catch up. And it just never happens. Why does it not happen? You had this opening spike in RTY, anchored the VWAP to the opening 3-minute bar, boxed out the range. From this point, actually, you saw the VWAP was initially above the opening 3-minute, but once it got inside it, look what happened. I'm actually just going to highlight this whole area here and just show you, look at the market just really stayed in that 3-minute opening high and low range, and the VWAP stayed in that box. This is classic consolidation, rangy two-way tape market. And most people overthink it, overtrade it, wait for the RTY to either rally or they start getting short and think it's going to break, and it ultimately just stays in this position. I go back to the beginning. Look at your dailies. Bollinger Bands open above the 5-day sloping up. Great potential for a trend day. Could be the same thing for a downward move if you're below the 5-day with an outward moving Bollinger Band. Then you get your 3-minute opening range, high and low, box it out, anchor the VWAP. The VWAP gives above or below that opening 3-minute high or low. It gives you a great idea of what the potential could be for the day. Hopefully this video helps all of you. And like I always say, I'm not here to give you the best strategies. That's for you to go out there and figure out on your own, but this is going to help you develop an edge. And really, as far as I'm concerned, this helps me more than anything stay out of bad trades than it necessarily puts me in good trades. But ultimately, as traders, sometimes that's even more important for me. Actually, most of the time, that's more important. Keep me out of those bad trades. Keep me out from fading those ranges on days like today. That does it for today's video. You can follow me on Twitter at Anthony Crudele. Don't forget to check out anthonycrudele.com. Got a ton of free stuff going on there. Trade well, traders. Have a great rest of your day.